So the first thing you want to do when you're actively trying to invest your money is you want to make sure that you are not chasing stocks or investment. Doesn't matter what type of investment we're talking about, stocks, real estate, crypto, it doesn't matter. Do not chase your investments. You are going to see massive run-ups and rallies in all different types of assets because people are going to get excited. When you have a bull market, a market that's going up, you have a lot of money out there. And when people have a lot of money, they can do a lot of dumb things with that money. So you can see a stock run up and then people will say, oh my God, this company is making so much money. Or people think it's making a lot of money. This company is making a lot of people a lot of money. Everyone's getting rich off of it. Let me come in and have some fun too. That's when you come in and buy, maybe use margin to come in and buy. And you do not want to be the person that's just chasing the stock, chasing the asset, because these are the people that get burned, because eventually the steam is going to go away. The early investors, the fundamental investors, the people that invested for the value are going to say, holy crap, this company is worth way more what we think it should be worth, so let's unload some of our shares. As they start to do that, you'll see the stock starting to come down, and then all these people that invested out of emotion, out of greed, are going to say, oh my God, I'm losing money, what do I do? And then you panic sell. I am still actively looking for deals in the real estate market, the stock market, and the cryptocurrency market, but the way that I'm doing this now is I am being pickier than ever. I'm being very picky with every deal that I analyze, and I need to know my goals, because before I make any investment decision, I need to make sure that the investment fits my goals and my criteria. The second way that I invest my money right now is I am passively investing some of my money. Now, before I jump into this, I do got to give you a little bit of a disclaimer, because I'm just a random guy on YouTube. You want to make sure you're always do your own due diligence, because investing has risks. You're never guaranteed to make money when you invest. You might even lose money. So again, you need to do your own due diligence and never blindly listen to a random guy on YouTube. So I already talked about how I'm actively investing my money, but I also have a passive investment strategy where I am passively buying ETFs, I'm passively buying cryptos, and I'm also passively buying physical gold. So let me explain what this means. ETFs are exchange traded funds. You could think of these like baskets of stocks. It's a group of stocks where now I can get general exposure into the stock market and general exposure to specific sectors like innovation or growth companies or healthcare. So I actively invest in individual companies because I like the idea of researching companies. I like the idea of staying up to date with companies. I like the idea of reading cash flows. I like doing that. I'm weird. I'm a money nerd. I know. But if you don't like doing that, then what you can do is just invest in ETFs. Now, an ETF is supposed to give you exposure either to the general market or to a sector that you want to invest in. So what I do is I invest in some ETFs that give me exposure to different things. Some ETFs give me exposure to the general stock market, some ETFs give me exposure to specific sectors, and some ETFs give me exposure to emerging markets overseas. Now, what I do with this is every week I have money that leaves my checking account that goes into these ETFs and is automatically invested. This happens whether the market is up or down. It doesn't matter. The way that you win with this strategy is you got to just keep consistently, passively, and automatically investing your money for the long term. The key for this strategy to work is you want to just keep investing your money whether the market is up or down. It doesn't matter. You don't change the strategy. It is a passive dollar cost averaging strategy, and this has been proven to work decade after decade after decade. Now, your goal here is not to make money in the next 6 months or the next year. Your goal is to make money over the long term. So this is a long-term strategy. So we're talking about years and decades where you just keep doing this and you build this essentially new savings portfolio, but it's not a savings fund because you're actually supposed to grow this money. But now you're just investing your money into the market and letting the market do its thing. So the reason why I invest in this is because I believe in the American economy, and because of that, I also believe in the future of the stock market. Now, just like that, I also have a passive strategy, a dollar cost average strategy for investing into cryptocurrencies. Now, I have a few cryptocurrencies that I like, that I believe in for the long term, and I'm doing the same thing here. I'm doing a dollar cost average strategy where every single day I have a little bit of money that's being invested into these cryptocurrencies. Now, again, this is happening every day, whether the market is up or down. It doesn't matter. These are cryptocurrencies that I believe in, that I think will have a lot more value in the future. So what I'm doing is I'm just buying a little bit every single day, and I'm just letting these things build. And again, it's happening automatically, and it's passive, and it's consistent. So I invest in ETFs because I believe in the American economy, and the reason why I invest in crypto is because for me, this is the people's movement of money. People are losing trust in the Federal Reserve Bank. People are losing trust in the Treasury Department, and what they're doing is they're creating their own movement of money. This is the people people's movement of money from the bottom up rather than the top down. And this brings me to the third way to, I don't know if investing your money is the right way or more of just protecting your money is a better way to call it, to protect your money in a high inflationary environment, that where your cash isn't just being eaten away to inflation, because what we're seeing right now is we're seeing record high levels of inflation. So what does that mean? Inflation is when you inflate something, it's when you increase something. And when we talk about inflation, what are we talking about inflating? Well, we're inflating the monetary supply, the money supply. So as we increase the money supply, either through stimulus programs or spending by the government that they don't have money to fund because they don't have enough tax dollars, so they print this money, or through super low interest rates, because when you have low interest rates, more people are likely to go out and borrow money, and more corporations and institutions are more likely to borrow money. So now this increases the monetary supply. So when we increase the monetary supply, what happens? It devalues our dollar. The currency, our dollar, goes down in value because it's not backed by anything tangible. Our dollar is not backed by gold or silver or anything else. It's just backed by a promise by the United States government where they say that our dollar has value and you need to use this dollar to make transactions. Now, that being what it is, what you need to do is understand what that means. That means that our dollar is an inflationary asset. Well, it's really just a liability because it's inflationary. That means your dollars are losing value. If I took $10,000 and buried it in my backyard 10 years ago, that $10,000 isn't going to have as much buying power today as it did 10 years ago when I buried it. So what you have to understand is your dollars are losing value anytime you see more inflation. And the reality is we're seeing a lot of inflation happen right now. You're seeing people talk about it all over the world and the news, especially in America, because we're printing a lot of money. We have a huge government deficit and we have these low interest rates, which are all contributing to inflation. So if you want to protect the value of your money has to grow in order to at least keep up with inflation. So there's a couple ways that you can do this. I'm going to focus on just two that I'm doing. One is through gold and one is through crypto. Again, these both have their own share of risks, so do your own due diligence. This is just what I do. So I already talked about how I passively invest my money in gold. But the reason why I call this also a protectionary investment is because, let's just think about this in the case of a dollar crash. Let's assume the value of the dollar crashes. Well, what's going to happen to the price of gold? Well, now relative to the dollar, the price of gold will go up because it still takes time, effort, and labor to mine an ounce of gold. And if the value of the dollar crashes, what does that mean for other assets, like stocks or real estate relative to the dollar? Well, now these assets will probably become a whole lot more expensive relative to the dollar if we see the value of the dollar go down, which would mean that if you're hoarding your dollars, it's going to be much harder for you to go out and actually buy assets. It'll be much harder for you to go out and buy stocks. It'll be much harder for you to go out and buy real estate because the value of your dollar has dropped. So one of the ways that you can protect yourself against that is by owning gold, because when you see more inflation, gold benefits because then people want to move their money out of their cash into physical gold. See, unlike the dollar, you can't print an infinite amount of gold. I mean, you have to actually physically go and mine the gold. So it takes time, effort, and labor to produce this gold. So it's not like dollars, which you can just print out of thin air. So for me, I own gold also as a protectionary investment. It's my insurance, it's my hedge. If the dollar goes down, well, now I can liquidate my gold and go out and buy other assets with it. Now, when I talk about crypto as a protectionary investment, this is a little bit different because most people are going to assume that I'm talking about just buying Bitcoin. Because now with Bitcoin, you have a limited supply of Bitcoin, and your goal with Bitcoin is now just to own it because you believe in the value of Bitcoin. And if you own some Bitcoin, well, now you own a piece of this limited resource. But that's not what I want to focus on right now, because to me, that's more on the active side and the passive side, but less of the protectionary side, because Bitcoin is very volatile. You see your ups and downs, and that's much more of an investment than it is a protectionary way to protect the value of your dollar. If you enjoyed this shorter clip from my longer videos, here's another clip that I think you'll love. And while you're at it, if you're interested in learning more about how to invest your money in real estate, our team put together an amazing guide on real estate investing. This guide goes over what real estate investing is, how to start using real estate to generate cash flow, and how to build wealth with real estate. This guide is completely free when you sign up for our daily newsletter. So if you want to read our guide on how to start investing your money in real estate, you can download that guide just by clicking that button right over there. Thank you for watching, and as always, keep hustling.